the paper assets as diverse. Oh, I have some euros, some yen. It used to be Deutschmarks and French francs. I have diversification, but it's within an ecosystem that's fragile. Okay. It's within a man-made ecosystem. So the system is systemically risky. And we're seeing that now. And the reaction to it is to buy gold and silver too.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. In today's market rundown, we're going to talk about, well, we're going to look at some informative precious metals tear sheets from a firm in England. And we're going to talk about stock market fragility. Then we'll look at some market driving news. First, let's look at the markets. The dollar is down almost 22 at 104.36. I'm sorry, up almost 22. 10-year yields are 434, up a basis point after having a strong day yesterday. Yields dropped yesterday. S&P 500, 5303, up 11, 12 handles after a sell-off yesterday. The VIX is 1296, stable after a mixed day yesterday. Gold is 2335, up 860. That's a bounce after yesterday's sell-off. Silver, rough day yesterday, 29.60 today, up 12 cents. Again, a bounce after yesterday's sell-off. Copper, no bounce, 450, down 1.25 cents. Incidentally, since Jeff Curry, the former Goldman analyst, said this is the biggest copper, biggest bull market he's ever seen, and he could be right, but he top-ticked the market anyway. Those guys. All right, WTI, 73.72, up 58 cents. Natural gas, 246, up 3 cents. Again, your commodities are bouncing after sell-offs. Bitcoin continues to be strong, so that's not a bounce. Up 300 at 70,884. Ethereum, 37.99, down 14. Right, so the Ethereum craze seems to have faded out, but there was a ton of buying yesterday in Bitcoin. It wasn't just the price, it was the size of the buying on the ETF side. Palladium up 12, 927. Platinum up a half a buck at 987. So that spread and a sell-off came in. Oh, well, actually, it didn't come in. They're both under 1,000 now, though. All right, grains. Grains are flaccidly unchanged. Soybeans up a penny, 11.74. Corn, 4.33, down a penny. And wheat up 40 basis points. There's silver. Quick comment about this chart here. I know there's a lot of silver people here. I drew this line here yesterday, and I just kind of moved it to make it fit. I don't really believe in this line. I believe in that line, and we're below it. Okay, so below that line, I think we have a date with this line. Okay, now we get above that line, then I'm wrong, and that's fine. It would be very nice to have this and then a little day here, and the next day have a green day up, and you have what would be kind of like a bottoming formation or something similar to a morning star, not a morning star, but something similar to it. And that would be nice, but you can't bet on it yet. Can't bet on it. I think it's going to search for value in this area for a little bit. Bang, 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 and then up. Who knows? Gold's a little less obvious. Well, that's Bitcoin. Gold's a little less obvious. I believe there was a lot of buying here. I believe it'll be there again. This is nice. This is what we want, right? We want the whole sector to offload some of the longs, the weak longs, and let the overbought area gets oversold, and the market stabilize above here. So if gold stabilizes above this line, silver stabilizes above this line here, right? We're good to go for the next leg higher. This is like your whole Elliott wave type of thing. All right, let's get to the stories. Fragility is the new volatility. All right, so today we're going to be talking about that with regards to the stock market, something I saw that caught my eye. And we'll go through the metal slideshow. First, today's stories or yesterday's stories. We had a lot of content up yesterday. Here's a podcast I did, how YCC financially represses, a taste of what's going to come to the bond market. A little bit of humor here. I mean, it's true, but it's kind of funny. I'm not even going to say the title. Crest Cat story, we talked about that yesterday. The AI equity craze and spillover effect for founders, the rise of hard assets. Just, you can see the titles. We have a lot of content, and take your pick. All right, let's start with I don't want to call it eye candy, but it is easy on the eyes. There's a firm in England called Saffra, Sarasin, if I'm saying it right. And they are dealers, and I have no financial relationship with them, and I'm not recommending that you go through them with your precious metals dealing. But they have some nice tear sheets, and this fell into my lap, and so I want to announce who they are before I start showing their wares. And the contents of the report or marketing piece are introduction, physical standard offering, platinum, palladium, silver, gold coins. And each commodity, it goes through them. So here's platinum. Platinum's properties and nice little tear sheets there. Actually something you'd give to family members that are like, oh, what do these things do? It really helps that way. Properties and substitutes, right? Important stuff. And then it goes through a chart about supply. Platinum there. Look at all that supply from South Africa. It's a South African metal with some Russian metal. Palladium is more Russian than South African because they have the storage. They store it. Silver, right? Silver. This is 2022. Okay, so it doesn't have 2023 in here yet, but you can get an idea. There's silver's supply per year and the breakdown. Argentina. There's silver's demand, 2022. I think this is actually pretty accurate. Gold, and you have good to know properties about each metal too. Gold, good to know gold's properties. Since the abrogation of the Bretton Woods Agreement in 1971, currencies are no longer fixed according to the gold standard, but now fluctuate freely. This event marks the beginning of the floating exchange rate system. Gold is considered a safe haven investment and can be used as a hedging tool in many cases. According to the World Gold Council, central banks are currently holding 1/4 of the world's gold stock. Central banks have to diversify their portfolios by holding some gold, foreign government bonds, currencies, and stocks. They tend to increase their gold reserves in order to maintain the confidence in the country's currencies and currency and solvency. Stop right there, because that is the paragraph that makes me want to go to, here's your gold demand. Makes you want to go to fragility is the new volatility. Set before you, here, I don't want to screw your eyes up here. All right, stay up here. Stay up here on this. All right, see this paragraph here, according to the World Gold Council, central banks need to have diverse holdings. So multiple countries, multiple assets, some bonds, some currency, some gold. And that's diversification. But it's really not diversification, meaning they only hold two types of assets in the bigger, more important, more simplistic picture. And that is they own paper assets and they own physical assets. And they view the paper assets as diverse. Oh, I have some euros, some yen. It used to be Deutschmarks and French francs. I have diversification, but it's within an ecosystem that's fragile. Okay, it's within a man-made ecosystem. So the system is systemically risky, and we're seeing that now. And the reaction to it is to buy gold and silver too. So on that note, as the world is slowly figuring out that the fiat system is fragile, because it's all of one type, it's all the same, different flavors of the same food, over and over and over again. they're diversifying more out of it. So on that note, take that whole concept I just described and bring it down to the stock market. Okay, the stock market is a market, right? Right, and it's a broad market, and there's diversity of opportunity. There's diversity of style and diversity of approaches. But as time has gone forward, we'll show you here, government and the people that are monitoring our markets have saw fit to funnel market risk into one bucket, right? Literally funnel it. So it was all these different ways to invest, gets put into an index, gets put into a mutual fund, gets put into an ETF, gets put into something that the Fed will do to buy or sell a whole basket. So what they do is they stop market risk. They don't let the market, it's just called free market capitalism. They stop the market's ability to regulate itself, right? They're constantly medicating it with monetary ease or QE or what have you. And because you don't let the market regulate itself, the market behaves. Don't get me wrong. But you exchange market risk for system risk. So the whole system gets overloaded. And eventually, what was a problem for one or two becomes a small problem for everyone, and it gets magnified. So little things become big things when they're allowed to fester. And that's what we're looking at here. So I'll read a little bit of this from Bank of America. Salesforce and Dell, two equity firms, experienced historic earnings-related moves last week. Minus 4.5 standard deviations for CRM, that's Salesforce, and minus 3.5 for Dell. The latest examples of U.S. tech stocks exhibiting outsized jumps or price fragility. When they say fragility, think system risk. Think the whole thing is at risk because you're not letting things breathe. In fact, such fragility shocks for tech U.S. megacaps are nearly 30-year extremes today, both in terms of frequency and magnitude. Now, what's a fragility shock? Well, it's this. Now, this is their proprietary information, meaning how they measure it. But if you look at this timeline, from 1920 to 1924, each one of these little spikes are events. Now, I don't know all of them, October 29, the crash, right? We know that. May 71, that might have been the Yom Kippur War. No, but it might have something to do with the Middle East. Maybe Iran. October 87, we all know what that is. That's the biggest one, right? And now, since the great financial crisis, you've had 1, 2, 3, 4, 5, 6, almost had 5, 6 instances of systemic risk. So they have to keep going to bail the whole market out rather than letting these companies, these little ones down here, rather than letting this happen where the market just kind of fixes itself, kind of heals. So they're going to have everything break. It's kind of like a seesaw that's balanced. The market is a seesaw that's balanced, 50 on one side, 50 on the other. And then when it gets out of balance, it tilts and something falls off and it balances again, right? But when you keep adding to one side to balance the other, you end up breaking it in the middle, right? The fulcrum breaks. That's systemic risk. And that's what we're dealing with right now. And the reason I'm focusing on that today is because the Magnificent Seven is really like, the final four now, or the penultimate two. It's not 7 stocks anymore that are moving. It's 4 or 3. And then it shrinks even more. So unless this market, here's the last thing I wrote. Anyway, market risk has been replaced by systemic risk for sure. And unless the rally broadens, it will crack probably after the first rate cut, believe it or not. So that's my spiel. Market news. The big news yesterday, I would have to say, is that the get is that mainstream media has realized that Elon Musk has information that says Elon Musk chips that he bought for Tesla are being diverted to X for XAI. Okay. his his prerogative, but a little bit of a problem there for public view if you're a shareholder in a publicly traded company like Tesla. On the geopolitical front, things are escalating and escalating in a lateral way, kind of like spreading like a wildfire. Israel is now looking at Lebanon, and that's a bad thing. I mean, it's a really bad thing. Put it this way: Israel is fighting Hamas in Gaza. That's to their west, right? Right. They have their eye on the east with across Jordan. They have to worry about direct from Iran, right? And north is Lebanon. So a three-front war is not really something they want to do. And I think it's kind of crazy, but I'm not on the inside of that. Anyway, it's questionable. Anyway, meanwhile, Israel is going to get a squadron of F-35 stealth aircraft. These are not F-16s. These are not cannon fodder for what's going into the Ukraine. The F-16 is an old plane, and they're using it to see what they pull out of Russia, what Russia shoots back. Data on deck today, 10 a.m. Factory orders. I'm sorry, Wednesday, Jesus. ADP unemployment. The premium is that report from Saffra. Enjoy that. It really is something decent to hand out to people that are interested in precious metals. So you can do that internally if you're a premium subscriber. And I would think that other metals dealers will probably do something like this as well going forward. It's a pretty good template. Going back to the markets, the bounce continues. Gold's up 8, silver's up 11. You could say, oh, that's a great bounce. But if you hope for it to go higher right now and you're a short-term trader, I think you're making a mistake. You want to hope for it to go higher, just all you need to do is get it above 29.77. And then that 30 strike wall, boom, will probably become a magnet for it again. In terms of gold, UBS just put out a report reaffirming an older report and tacking on some more upside to gold. The lack of rally after such a favorable statement tells you that the market's already too long. So we'll see what happens. I think the stock market is fragile. We'll see how it goes. Have a great day.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is 2023 dated 1-ounce silver Cougarans from the South African Mint for only $3.10 over spot. And even with the price rallying, fortunately, the premiums are still on the lower side. And to get a full price list or place an order for silver Cougarans at $3.10 over spot, just email us at Arcadia@Miles Franklin, and we'll be happy to get you set up with anything you need. And as always, thanks for watching. Hope you're having a great day out there. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.